In the pre-market, BlackBerry shares are up over 6%. Let's get more on the story now. Alan Knuckman from Trading Advantage, which provides training for investors, joins us from the CME Group in Chicago. Alan, always great to see you. This news just coming across this morning. What do you guys make of it? Last week it was private. Now they're saying a possible sale. What's the reaction on the floor?
Well, they want to keep all their options open, obviously. Last week, we saw the price movement because of the talk about them going private. The stock was up 12% last week. We're seeing a little bit of a bounce here today in a down day in the marketplace. It'll be interesting to see how it holds for the session. But if you look at BlackBerry, technically, it's already had a somewhat large correction. It was at 1650 here just a couple weeks ago on April 30th. And it's forming a base at the $8 level, and 850 has been a recent low. So, you know, we had a bounce off it last week. It'll be interesting to see where we go from here.
Alan, I'm always curious. I mean, we've been long reporting on the demise of BlackBerry, if you could call it that. I have some figures here. When it comes to phones, it's only maybe 4%, if even that, of the market. That percentage continues to come down. For operating systems, 2.9%. It's getting smoked by Apple and Samsung. Who would want to buy this company?
Well, it's got a brand. It's a name. It's got goodwill. If you look at it, they changed their stock ticker symbol from RIM, Research in Motion, to BlackBerry because everybody knows BlackBerry. It's like Coca-Cola, as far as a brand. So it has some value in that standpoint. And you've got to think about, yeah, their market share may be declining, but the overall market is continuing to expand. They do have a lot of very, very faithful customers. They do have a revenue stream that's consistent. Those people that haven't given up on BlackBerry aren't going to give up on BlackBerry anytime soon. They're addicted to it. If you remember those reports, people used to, get carpal tunnel syndrome from using their BlackBerry so much. So there's a following. There's some revenue there. It has value. And I'm a trader that likes to look at things when they fall out of favor. You've got to look at a stock when people aren't paying attention to it. It's not shiny and exciting like Tesla. But down here, what is the risk? It goes below $8. We're at $9.75. So $8 to me is the key threshold to keep an eye on. That was the resistance all summer last year when we went above $8. We rallied and the stock doubled. And then this year, it looks like $8 is a support point. So lean on that level as a trader and control your risk. I'd rather be a buyer from a reward to risk standpoint at these levels.
Well, that's a good point. I mean, when you don't have much to lose, I guess. Funny you mentioned Tesla. We're going to be talking about Elon Musk for another reason later in the show. I do want to get your broader perspective on the market here. Last week, a difficult week. You definitely get the sense people are profit taking. Is this just a consolidation period, or is this the beginning of something more of a substantial correction here?
Well, you know me, I'm always optimistic, and I'm not going to argue with the trend in the market and what the markets are telling me as far as price and price action. You've got to put in perspective. It's been 10 days since all-time forever highs in the S&P. The Nasdaq made 13-year highs just last Monday, so it's been 7 days. Let's put that in perspective. We're kind of in the dog days of summer. Earnings are coming out, and if you look at it from an earnings standpoint, the numbers continue to impress. Earnings per share right now, if we can get that back up to 17. Price earnings 17, that projects 2,000 in the S&P. So there's a lot more upside left. The average price earnings ratio since 1989 has been 19. So we're still significantly below, but that's all about the earnings. Corporations are doing well. Well, the economy may not be doing well. The stock market is its own being, and the stock market's doing very, very well. 1680 had been an important pivot point in the S&P, and it looks like we're below that. Keep an eye on that on a weekly basis. We were only down 1% in the S&P last week. So nothing catastrophic. A little bit of a pause is all I would look at.
All right, a pause that refreshes. Alan Knuckman from Trading Advantage. Always great to catch up with you. Thank you for being there for us on BlackBerry today. Appreciate it. And Nina, it's amazing. I know we're supposed to be in the doldrums of summer, but this has been a busy news summer.